we got a new segment called Learning Curve. So let's get started. Thanks for joining. Please like and subscribe to the channel.
Man, I'm suing. I almost got rich today. Okay? Stop sticking your hand in the jar. You get, man, listen. I'm not, that, I told you yesterday, I was out of selling the call business. So I'm going to talk about real, actual investing and trading strategy. But I just can't.
Welcome to the Long Road to Profit. This is your host, JR. First, let me tell you, I'm not a financial advisor, and this is not financial advice. Anything that I put in this vlog is for informational purposes only. See the disclaimer in the description. Man, we got a big episode today. I've been talking to friends and family. People have been asking me, you need to put something together for new traders, people who are just starting. A lot of times, some of the stuff that you talk about may go over people's heads. So let's start at the basis of, how do you get started? What kind of information should you be looking at? Go over some of the jargon that's kind of thrown around by people who spent years in the market, where newcomers come in and like, what in the heck are you talking about? So, learning curve, how to read a stock report. So one of the most difficult things when you're just getting started investing or trading is trying to get a hold of a market that is massive. There are all kinds of different companies. There are manufacturing companies, there are production companies, retail companies, real estate companies. The list goes on. Financial companies. The list goes on and on and on and on and on. And there's no way that you can know all of these different businesses inside and out in order to make a decision based on which one is better and which one is worse. Okay, not with any edge or inside information. So what we often have to rely on in making investment decisions are stock reports. And if you're going to make an investment decision based off of a stock report, probably need to know how to read one, what you should be looking for. So when given a stock report, it's easy to get overwhelmed when the information is presented to you, because there's a ton of information, probably in an industry that you don't know a whole lot about. Okay, maybe passively familiar with it, but don't know a whole lot about it. So a lot of that information also going to be really hard to digest when you're a new investor. So I'm going to give you a look at what I do and what my process is, looking at a stock report, reading a stock report, what information I'm looking for, and maybe that can help you as you begin to use them. Now, I am going to be using the stock report from E-Trade, Thomas Reuters. So this is free with E-Trade. If you have an E-Trade account, I don't know if it's free with Robinhood or whoever else, but I do know that it's free if you got an E-Trade account. So this is what we're going to use. So I picked this company completely random, ENPH, ticker ENPH. Here's the first page of the Thomas Reuters Preventative Stock Report. Like I say, that you can pull down right off of E-Trade and review. And I like these reports simply because, like I said, I mean, no way I can know all these different industries inside and out. I need some kind of tool to give me a guideline as to, how much does this stock cost? What has its performance been? What can I expect to get out of this? And what do analysts who cover it think about it? So those are some of the things that we're going to talk about. So on the first page, a great, at a glance look. The stock is $167.37 at last close. You'll see that this was last updated on Friday, February 26th. So they do keep these updated regularly, so you can go back in and check it at a later point in time. But this is accurate as of February 26th, as indicated by the right hand corner on the report. So total market cap $24.5 billion. So it's a $24.5 billion company. If you look at its current valuation, it's priced at 186 times the trailing earnings and 82 times forward-looking earnings. So it's expensive. Given that, just as the historical average, I think for price to earnings has been 20.
in the S&P 500. So that gives you an indication of what it means to be priced at 82 times future earnings. Average overall score. So what they do is they take uh, 6 different indicators, 6 different scores, and they average them. Okay, and that gives you, you know, an indication of from 0 to 10, where does a stock come in at. That doesn't necessarily mean that it's a buy just because it's better than 5, but it just it kind of gives you an indication that like I say, what the average is of the indicators that they're using to evaluate the stock. Now, there are 2 indicators that I think are the most important. The 2 most important to me are earnings and fundamentals. Now, they also have a streamlined average score. I think it's on the next page, where they actually just average those 2 things, and or it's an optimized score. To me, I think that's a better indicator, and I'll show you why. So let's and real quick before we go to the next page, you'll see the price volume charts and the 5-year return, which is just absolutely ridiculous. 8,439%. This stock has been insane for the last 5 years. Too bad I didn't own it. Okay, so here are those 6 categories I was talking about: earnings, fundamentals, relative valuation, risk, price momentum, and insider trading. Why are earnings and fundamentals more important? Basically because you're telling me from those 2 things, what kind of financial situation are you in, and what kind of growth have you been experiencing. The relative valuation, what you're worth, as relation to the rest of your peers, that doesn't really move me much. Risk, obviously, I'm not looking at a stock, or for how much risk is involved in it. Typically, especially when I'm looking for an investment. So it's I'm not saying that risk isn't important. Risk is obviously important, but typically the stocks that I'm looking at, I guess before I'm even looking at you, you're not a penny stock. Okay, I guess is what I'm trying to say. You're not a penny stock, so I expect that the risk is going to be heightened on growth, heightened on young companies, but certainly not like it would be on the penny stock. So I mean, risk is yeah, it's important, but not to me as important as the fundamentals and the earnings. And I think that tells me more of a story about who you are. Price, momentum. So what direction has the price been moving, and how, I guess, how strong is it moving strongly in an upward trend, or is it moving just kind of chugging along? Insider trading, what are the people doing inside the company? I could almost care less. Some people use that as an indicator. Well, CEO doesn't believe in the company, so he sold stock. Well, maybe, but maybe he needed to raise capital for something else. I don't know. I don't want to read too much into that. I really just want to look at this company. So, one of the most important things, or one of the important parts about this whole report that I like is the peer analysis. So, first of all, I like that it gives me a list of peers who I may or may not be familiar with, and I can look at all these things and compare right here on the sheet. So price momentum, valuation, fundamentals, and analyst recommendations is all right there on the sheet. So as you can see, it's basically all of these renewable energy stocks have been down over the last month, and pretty significantly. So EMPH has been down 17.4%, but you'll see others down 26, 22, 26, 32. I mean, so they've been getting, the average here is 20%. Okay. But 3 months, they're up. So there is clearly volatile. The market's volatile, and this sector and these peers are obviously volatile. But they've seen just massive 1-year returns, 234% 1-year returns. And so, just looking at that, I can say, hey, these things have gained a ton. And it's, the price momentum in the last month is moving in the opposite direction. And based on where they came from over the last year, boy, it could get ugly for these people. So I'm a little concerned when I see a run up that's that strong, over 200% over the last year. But also, yeah, I'm not going to say that that's going to be a make or break in my evaluation of the stock report. So I'm reading the stock report. Bam, I like that. Clearly there's some momentum behind it over the last year, but that momentum could be changing because of the last month. So when you look at price to earnings, I really don't care much about the trailing price to earnings. That's the past. What I care about is the future. So when you look at the average valuation here of these companies in this sector, um, this one is kind of expensive. The average is 59.1. It's at 82.8 forward price to earnings. It's pretty expensive. Now, one of the things that you like when you get over to the next tab is okay, from a margin, a net margin perspective. Um, it's no wonder why they're worth more, right? I mean, the average in this sector is down is negative 11%. Now that's skewed probably by Beam and what is this other one, Nova, one minus 113%. So I mean, those you can almost throw those numbers out. But even if you look around at almost 1%, 6.4, 2.8, 6.2, I mean, a lot of these companies ain't making a whole lot of money. So I like the fact that 17% net margins. And if you look at what the analysts got, the analysts on average have a buy rating for it. So the analysts like this sector, they have a buy rating on the sector. So that's, a quick run through of this page. So now let's go over to the earnings. Real quick. So earnings is also something that is in the past, but to me, earnings also give you a story about growth and what's going on inside the company. And so, I like to see solid growth. And what that looks like obviously depends on the industry, but you certainly would look at a company if their growth was going backwards. You may look at them askance rather than a company who's growing at 20, 30, 40% a year. So I like, that's what I like about to see about earnings. I also like to see what the analysts have and what they how good are they at picking up or down on earnings. And so as you can see with this one, if you go down here to where it has the last 4 quarters, okay, there's been 4 positive surprises, 0 negative surprises. So the analysts are setting the bar, and Ian and PH just keeps crushing it. They just keep time after time after time after time. So that's good. Estimate revisions, okay, they're revising up, which means that they keep seeing that this company is continuing to grow. So strong earnings score from this company. Okay. This is a continuation of the earnings report. One thing that I like to see too, if you go down here to this to the bottom of the page where it's got annual revenue, you'll see in 2019 their revenues are 623 million. Now we already know they're already profitable, right? So if you expect margins to hold or maybe even grow, this looks really good to you, because the estimates for 2021 is they're going to be on the low end somewhere between 1.4 and 1.5 billion on the low end. High end in that's 2 years. That's dang good growth. And maybe that's why their valuation could be justified. Also goes back to analyst recommendations and kind of looking at trends in earnings. So here's the second most important part, the fundamentals. So as we look at the fundamentals, Um, we got a score of 0 to 10. This one's rated at a 10. Uh, it's profitable. Not a lot of debt, obviously, from a 9 rating. The one knock you can put on them is that they don't pay a dividend. But outside of that, I mean, they've given spectacular growth. So if you're looking for an area as a in your portfolio as a growth stock, this may be it. So you look at the characteristics under fundamental indicators, and you look at it as a comparison to its peers. It has a better rating than all of them. Okay, even FSLR, which is rated at a 9 out of 10. So you can look at the revenue growth 24%, gross margin of 44%, return on equity of 35%, and net margin 17.3. That's extremely good, very very good. So there's obviously lots of cash on hand. They have a current ratio of 1.7 on their debt, which is low, which is good. Debt to capital of 1%, which is good, right? This company's not carrying a lot of debt; they're making money. No wonder people have invested in this company. Here's a chart that can get a little scary. Price to sales. So right now, the industry average, if you can look down here, is 6 times sales. They're at 29.2, and a lot of that's because looking at future growth, right? Here this gets scary down here too. I mean, price to earnings. Actually that's pretty good. The industry average is 100, and therefore price to earnings is 82. So they actually priced a little cheaper when you use that as a metric. When you use price to sales, they're a little bit more expensive. But we don't really care as much about sales as we care about earnings. We care about earnings. That's how you stay in business, is you're making money, not how much revenue you do. So I'm a little encouraged by that, versus the industry average. And if I was sold on, I wanted to get something in renewables, that may be a selling point for me. So key takeaways. Okay, fundamentals and earnings are the most important part of a stock report. What you should be doing is comparing the valuation against the valuation of its peers. Now I'm gonna do one thing before I let you go. I'm gonna go back to this one with all the peers. Okay, when you look at the valuation, right, at 82, it's like, man, it's a little expensive, especially compared to FSLR, right? And I guess my takeaway from this would be, I like this company. It's a little expensive. The 1-year return has been crazy. FSLR looks like a better value play if I wanted to be in this sector. That doesn't mean you can't own EMPH. You could. And from a profitability standpoint, and I would need to look at this same, go through this same process for FSLR. Let me look at all of the information so I can say, okay, how profitable are they? How fast is their growth? What am I willing to pay for that kind of growth? But if I wanted to be in renewables, this is the way that I would read the stock report. Now, stock reports are only part of your investment research, not the whole thing. So you want to be careful not to just rely completely on stock reports, but they are a great tool that helps you get a better perspective, especially of, businesses and industries that you may not spend a lot of time in. So this has been the Long Road to Profit. I appreciate y'all stopping in, checking me out. Hope you learned something. Please leave me a comment. Hit the like button, hit the subscribe button. Come back next week. We're going to be back with Learning Curve again, giving you some more information to help you shorten your road on the long road to profit.